Hello and welcome to another update video about NEAR. On the NEAR chart, we are still holding the support area that I explained to you in yesterday's video. So the support range that the market is currently testing, by the way, NEAR is holding really well. The support range is defined between $6.58 and $4.67. I think I highlighted in yesterday's video, I just opened the chart today and we saw here and I saw the A and B already in play. So I think we talked about that microstructure yesterday. To be honest, I can't even remember. But we talked about, because we had an initial reaction, right? There was an initial reaction to that support region, but it was it would have been a very shallow wave 4 correction. So the idea was, okay, A wave down, B wave possibly then, because I think we saw a bit of a rejection there. And now we see the C wave down. I already gave you in yesterday's update a target for the C wave. And to be honest, that was reached or nearly reached. Maybe we get one more low and touch it exactly. That's at $6.18. The market came already down to $6.34. It's just that the 100% extension level is usually a common target for a C wave. So I'm talking about the 100% extension of the A wave. So waves A and C often have this same or a very similar length. Yep, the C wave can be a little bit longer. That wouldn't be a problem, because for this wave 4 we can consider the entire support area as relevant all the way down to $4.67 if needed. At the moment, this is what I consider a wave 4 correction, a flat structure in which the A wave completed, the B wave was quite high, and the C wave down is unfolding right now. Below $6.18, the next support is at $5.44 and then $4.67. And if we see a move to the upside, then the B wave, if broken, the B wave high, if broken, would suggest that wave 5 is unfolding. And that B wave high, basically our breakout point, is at $8.60. And then the third wave high would be additional confirmation that a low has formed in wave 4, which is here at $9.07. So basically, still expecting here one more high at least in this potentially still unfolding wave 1. What we can identify is a potentially still unfolding 5-wave pattern to the upside from the January low. So I'm talking about the 23rd of January low. Many other coins bottomed on this day as well, at least locally. But I can only really identify 3 waves to the upside to the most recent high that formed. Okay, so it's ideally we get one more high. And this one more high could reach the next main Fibonacci level, and this is the 78.6 Fibonacci retracement at $11.38. A move above that, just slightly above, could take us to $11.80. And then we have here, and you see that on the daily chart, a descending trend line that could potentially stop the price, at least temporarily. And these are the next obstacles as well as objectives and targets for the bulls. Once we have one more high, I think we can say that we have at least a very, well, I would argue it's a 5-wave move up here, but there will be other interpretations that are possible either way. Sorry, I think it's a 3-wave move, but there will be other interpretations. You could interpret this move up as a 5-wave move with a very much extended 5th wave here to the upside. But either way, once we have another high and then see a decline, I would consider this possibly a wave 2 pullback. So we'll offer then a support range for that. That would be lower than this support range most likely. Well, it depends on how high we go, right? But for now, let's just focus on this support range, which is between 467 and 658. What I need to add to this chart analysis, which gives you all the relevant levels and parameters, is that a wave 4 correction here has usually the tendency to develop into a more extended corrective structure. What do I mean with that? Well, you see we have an initial A, B, C structure. Yep, this could be wave 4, absolutely, but it's also possible that this is only the larger A wave of a larger ABC structure. Then we get a B wave and a C wave. So there's no way of knowing that. We can only say, okay, as long as we're holding that orange zone, our interpretation for one more high is valid and a reasonable assumption. And we just need to be ready for fake out rallies and extended wave 4 corrections That's just what often happens in these wave 4s. So if you know that, if you're prepared, at least you can sort of plan for it. You can't really predict it, but it often happens. So that means, you know, if you maybe find an entry in our support area and it suddenly rallies, I mean, to be honest, to that B wave high, I mean, we talk about a rally from where are we now? Here, $6.60. Let's say it goes all the way up to that like 840 level again, maybe even higher in an overshooting B wave. And we talk about 20 to 40% plus, you know, that's definitely enough to take a little bit of profit, maybe take, I don't know, a little bit of profit, move up a stop, whatever. And then you are protected in case the support region is tested again. Just some food for thought. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.